Good morning, Facebook. I'm Jill Malandrino with the Voice of America, and this is NASDAQ's Facebook Live. And welcome to July trading, the third quarter and the second half of 2017. Time is certainly going by pretty quick with these U.S. markets. And joining me today is Mike Lamothe. He's the founder of ChartYourTrade.com. Mike, thank you for joining us as always. And I'm really excited to talk about this topic, 4 fatal mistakes that traders make. And I think a lot of people want to hear exactly what those are because we have all made them. Before we get into that, though, you have a special shout out, don't you?
Yes, I do. I'd like to say congrats to my cousin Robbie Plotkin, who is graduating U.S. officer training this week. He graduates July 6th. So congratulations, Robbie. Thank you, and thank you to everyone who serves for protecting us. Truly, truly appreciate it.
It's a perfect time of year, too, July 4th. You couldn't ask for better training. So congratulations to Robbie and to your family. And let's get right into this. 4 fatal mistakes that traders make. What's the first one?
Yes, so this is a topic that's very near and dear to my heart because this is, I've made all these mistakes personally, and I want to help everybody out there, especially new traders, avoid these mistakes. So the first mistake is to listen to a guru or to listen to somebody on social media, somebody that's talking about X, Y, and Z stock, that the stock is going to go to the moon. Right. Don't do that. You have to do your own due diligence on these stocks.
Right. Well, that leads into your second mistake that's commonly made, having listened to these gurus.
Right, exactly. So the second mistake that people typically make is they'll just buy a stock at any old time. So after they make the first mistake, then they'll do the research. Then, okay, I did the research, so it's now time for me to go and buy that stock. Well, you can't just buy a stock at any old time. The way that I like to do it now, what I've learned is to wait for a price consolidation, so a base pattern, typically at least a couple of weeks where the stock trades sideways, and then wait for it to break out of that pattern and buy it after that.
Right. Well, getting into a trade is really easy. Getting out is really hard. We have all learned that the hard way, which goes into your third common mistake.
Right, and it's another thing that I learned the hard way too. So a common mistake that a new trader would make is that you don't have an exit strategy. Mm-hmm. So you buy a stock and it moves against you and you're down 10%. Oh, I'll hold on, it's going to rally back, then 20%, then 30%. And then before you know it, you could have a big loss. And by the time you get down to, say, a 50% loss, it takes 100% gain just to get back to even. And those don't come around very often. So it's so important to have an exit strategy for when you're going to get out. And also for when you're going to get out with a win as well, because when the stock starts to move in your favor, that's when a lot of emotions start to take over and people start to feel, okay, I don't want to lose this gain, let me sell here, and they end up losing a stock that ultimately does go higher and higher and higher. So what I learned to do is to scale out of a position. So I'll take a position and once I've doubled the amount that I've risked, I'll take a little bit off, anywhere between 20 to half of what I risked. And then from there, I'll let the remaining of it run, and I'll consistently raise my stop losses, so that way I'm locking in gains along the way. If it pulls back, then thank God I locked in something. Mm-hmm. If it continues to run, then thank God I held on to something.
Right. Well, and that brings you to the fourth mistake that's commonly made, and that's basically establishing your own risk parameters, because while you might manage your position that way, someone else might be comfortable. Okay, if it's down more than 20%, I'm out. If it's up 30%, I'm out. So everyone's risk parameters are different. And I think that really ties in nicely to your fourth common mistake.
Sure. So risking way too much. So when I was first starting out, I would take my entire trading portfolio and plow it into one stock and hope for the best. That doesn't work, and I learned that the hard way.
And if it does work, it's a stroke of luck and not something that's consistent for sure.
Exactly. So what you want to do is you want to not risk it all. You want to have an exit strategy. You want to get in at the right time, and you need to do your own due diligence.
All right. And we can find all that out on ChartYourTrade.com, I'm sure.
Absolutely.
Okay. Well, thank you very much. And congratulations again to your family for that wonderful news. And Facebook, thank you, as always, for joining me. I'm Jill Malandrino with the Voice of America, and this is NASDAQ's Facebook Live.